Hey guys, what's going on? Welcome to Thursday night Super Forex webinar. I'm excited to have you all here. We are currently counting in 79 participants, students, people who are hungry to learn. We got people from all over the world, all over the United States. It's great to see you guys all here. We got Indiana, Jackson Heights, Queens, Brooklyn, Queens, LA, Knoxville, Tennessee, Cincinnati, Ohio, Africa, Trinidad, Nigeria, from all over, guys. I appreciate you guys all taking the time for being here. I hope that we can provide the value you seek for, and I think that we are going to do just that right now. So we're gonna go ahead and get right to it. We got our first speaker coming up. We're gonna go ahead and I'm gonna introduce him right now. His name is Jonathon General. The man is a legend, let me tell you, from where I seen this kid come up, from where he came from, to literally being homeless and living in his car, to now being a full 6-7 figure trader in the markets and just killing it, having students of his own as well, which I'm very proud of. And I love to see this guy grow. I still talk to this guy here and there, former student of mine. I'm very proud to say that. And I love to see his success and to see where he is today, where he took his life from where he used to be, simply by learning how to trade and how to manipulate the markets to his advantage, right? There's many ways to treat these markets. There's many ways to read the markets, but if you find your own niche that works for you, there's no way for you to change that. I mean, this kid, as a student of mine, he came in, he took what I taught him, but then he also threw in his little twitch, his little notch, and this is exactly what he's gonna teach you guys today. We're gonna start off, he's gonna go ahead and teach you guys basics and also what he did to get his account from where it was to where it is today, and where it will continue to grow from here to the years coming. And you know, he's gonna provide for his son, his family. So this guy completely changes. He changed his life around. He changed pretty much everything, and I love to see this guy grow and to see where he is right now. So Jonathon, without further ado, guys, welcome him. Throw up some fire emojis, someone. I want to see this guy go ahead and take over. All right, I'm gonna go ahead and stop my screen share. You can go ahead and go from there, brother. Are you on?
Yes, I'm on, bro.
Welcome, man.
Hey, man, thank you, man. Thank everybody for coming too. This is the most I've ever spoken in front of, actually. And he's right. I took a lot of stuff to my advantage, and I really pushed forward and moved as hard as I could, which I hope everybody do the same, because the only thing I'm doing today is I'm going over the basic fundamentals of the Forex market. I've been assigned to show you guys support resistance. This range, the support resistance is used around the whole Forex community. I mean, we all have our own way of drawing support resistance. We all have our own way of seeing it. But I don't know everybody's level of trading. So I would use the most basic concept, and that's taught all around YouTube and taught all around babypips.com and different people that shows on support resistance. And you can use this around just about anywhere with any Forex market. So I would start off with the arranging market accumulation phase, consolidation, Asian range, just whatever you want to call it. It's still the same thing. And that's, if you can see my screen, guys, I hope you guys can see my screen perfectly. And we would use this type of range to see basically where the market is heading. And you can trade this range during this consolidation phase, where we can catch major pips depending on what time frame you are using. And during this phase here, the market is about to make a certain move, whether it's to the downside or the high side. And trading this is the most fundamental strategy that we can come across, actually. 1 second. And we have, next we have our bearish range. The market will come down and make previous lower lows and higher lows. And using this bearish range, we can draw our support resistance line as well. And these are the ranges that we will use for our bearish range. The market will break through our support, and our support return to resistance. And it will continue to apply the same method throughout the pushes to the downside. We can use these, we can call these zones, support resistance. We can call this a bearish trend. You can use a trend line for this. We can call this our channels. It really doesn't matter what we use. It's all the same thing, no matter what type of method. It's the same eye for this specific range. And now we have an ascending range, which is a bullish market. The market does the same exact concept, but in an ascending form. We would draw this up the same exact way. We can find these swing points or higher highs and higher lows throughout the market. The market repeats itself like this on a daily basis. And we can use these as entry points to get into the market. We will have an ascending, we'll have accumulation phase, descending, and ascending range. And we can use this and connect these all together, which makes our whole market cycle, which is one of the guys is about to go over with you guys. We have the whole entire market cycle here, and this is easy to map out. But we will go to a bigger chart on our weekly time frame, and I will show you guys the basic concepts of support resistance. We will come to the top. If you guys do not know what you're looking at, we just find the highest point of the market, and we'll mark this up. 1 second. And we'll mark up our highest points. I use zones personally, but if you want to use a different thing other than zones, you can. You can use a line. But personally, I use a zone because I like using zones. And then we will find the bottom part of the market, which is support. We'll come to the lowest part of our wick or candle, and we will mark up our support. So this is for the eyes that do not know exactly what we're looking at. These are our major support and major resistance and major support of a weekly of our weekly market. And now we shall find our minor resistance and our minor supports. We will find where the line had touches the most in the area. So we have repeated touches in this area right here. The market repeated there. Then we have another repetition of here. We have a touch, touch, and touch. We just follow the same concept. Now we still have our minor support resistance lines. And we can do the same exact thing of so on and so forth. These are the point where the market will take a major swing in the area, which has happened here. And now we can move down to a lower time frame, which we call top-down analysis. We move down to a lower time frame. I think it disappeared. Now we're on a daily time frame, and we will do the same exact thing on our daily time frame. We have our highest point of the market, and we have our lowest point. We have a major support, a major resistance, and our major support level. Now we do this to mark the market out in order so we can track what the market makers or what our current market is doing. At this moment, we probably have we have a ranging market with USD JPY, and we can go down to a lower time frame to mark out the ranging market. Once we see a ranging market, we can excuse me, guys, 1 second. Oh, gosh. All right, sorry about that, I'm back, guys. We will have our accumulation phase, which is a ranging market. We can trade between these two lines if we want to. We just don't blindly take a trade, though, once we have this phase. We will go down top-down analysis, move from a higher time frame down to a lower time frame to see when we will enter into the market, especially once we have a major resistance or major support. And once we do have our breakout phase, which is in this area here, around 27, we will always wait for a market to come back to retest the new support or the new resistance. According to this chart, this is our new resistance after the breakout is taking place. The market came back to our resistance and now it's retesting it as we speak. We will need confirmation in order to retake this trade to move back down for a sell. And as we marking up our chart, we just follow price because the price makes this pattern constantly. Now we see once we move down to a lower time frame, the market is making the same exact pattern as it did in the bigger time frame. Now we have our lower lows we have our lower lows being made over here. We have our lower lows being made here. And once our lower lows is being made, you can map out from our swing points, our resistance areas. And we use these, as mentioned, our target points to take a price. Once the price is breaking these lower lows and moving to a different area, now we're price will be making higher lows or higher highs. We have another swing point that's being made here, and we have a higher high versus another higher low. And marking these up is basically our price action area, and we should take a buy down here if we could. But as price move over to our main resistance or supported area, this is where we will have an alert for ourselves. Price may change directions, and that's why we'll move these to a different color. But as explaining this, I have figured out, well, I didn't come up with the process, but I was shown a process of practice marking up my support resistance. And I call these flashcards. Once I come up with a chart, I will screenshot a previous markup that I have taken. And you can easily go on TradingView and you can use the take snapshot camera after you mark up the chart. Training your eyes to see this is part of one of the most easiest things that you can come across. Actually, trading this is easy, but when it comes to the psychology behind the market, that's different. So in order to get better at seeing the market and trading this, we will just come to a bigger time frame, as I mentioned before, and we would take a snapshot of what we already marked up. After we take a snapshot, we can put this in our books and we can save this and use this as a reference later on once we see this same exact pattern. But once we marking up support resistance for any pair, it's pretty much the same logic. We move to a bigger time frame, we'll take our highest points, we'll take our most recently touched points or lowest points, and we will keep these marked up. And this is here. The reason why I use zones is so I can see a zone area. Market doesn't move in a straight line. Once we have our markets charted, we can use these areas. We can use our most recently touched areas as a support or resistance. And we'll take a screenshot. But that's all for me, guys. I'm gonna go ahead and pass this back on to Mr. Jeff, and hopefully he can take over the screen from here. Jeff.
That was great, man. That was great. Appreciate going over that, man. That was a simple and easy way to understand the markets, and a great way to just get started and see the market the way you just put it, man. Structures, viewing it from zone to zone. I love the way you put it, man, and you made it really simple. I appreciate you taking your time for that, man. Hope you guys that were listening took some notes. That is the pretty much the basics. I love to trade that way. That is the way that I love to teach how to trade, and the way that a lot of people that I trade with do it, because it's so simple. There's no need to overcomplicate it. It's just zone to zone and learn. As long as you can see the market the way that works for you, is always gonna make you profitable. But you also have to understand that there's so many multiple ways to look at the markets. It's a pretty much a vantage point game. All right, two people can view the same market, two different ways, and either it works both ways, or one way will be completely wrong, or maybe one way isn't ready yet and the other one is. It's always going to work out. So it's always good to work zone by zone. You saw the way he zoomed in and just screenshotted that and focused on that specific area, because that's where price is right now. That's where price is structured to retest. That's where the zone was. And that's what made sense for him. All right. So the market is always to be tailored, right? It's like a customizable car, gun, video game, whatever, right? Your own little world. You get to customize it to whatever works for you. That way it makes sense to you. It's your profits at the end of the day. And it's just a matter of repetition and consistency, which he will tell you he did a lot of, man. This guy, he told you guys about his little flashcard. He would message me and show me his flashcards. He would draw a little thing on one side, and the other side it will show, you know, the answer to what he's looking for. And he did that repeatedly and studying that over and over again. So that was a good way that he made that that work for him. All right. So I appreciate Jonathan for taking your time and showing that value for everyone else. I hope you guys enjoy that. All right. Next, I got Mr. Joshua Rosario, Mr. 5-year Forex vet. Now, I seen this guy trade. This guy is a beast. Mr. CEO of Living Life Enterprises. I seen this guy grow. His trading career is phenomenal. He's his own CEO now, pure business owner, Forex educator, mentor. This guy's been doing it for a while, and he's ready. He's here to show you guys some value. So give it up for Joshua. Joshua, you can unmute yourself. Go ahead, man, and take over, brother.
All right, awesome. Can you hear me clearly?
I can hear you.
Perfect, awesome. Thanks. Appreciate that introduction, Jeff. Appreciate you for hosting this webinar for the public. As you know, for me, I love teaching this stuff. I love when people are serious about learning about the Forex market, because it's definitely a skill that many people need, especially in times that we have right now. So I'm gonna go ahead and go straight right into it, guys. I'm gonna go ahead and share my screen. And basically today, what I'm gonna be talking about is kind of a little bit what Jonathan talked about, but more in depth. It's not too advanced, but it's basically intermediate. And you can take these these things and apply them to your current strategy. So I'm going to be talking a little bit about price action, and I'm also going to be talking about confluence or confirmations, and the types of confirmations that you can use to kind of, you know, be more confident in a trade, whether you want to buy, whether you want to sell, so on and so forth. So I think what I'm going to do is I'm going to begin by just showing you guys how I mark up my charts. You know, kind of like what Jonathan went over. I'll go from like the highest time frame, usually the daily, because I'm more of an intraday trader. You know, I'll hold trades maybe for a day or so, waiting for it to go my way, and then I'll come out of profit, or I'm out the session um, right out at the end of it. So I'll go in at the, let's say we are in Asian session right now, so I'll take a trade maybe around this time, and then I'll come out maybe, you know, 11 p.m. or so, or I'll just leave it. I'll leave it open depending on the pair I'm using. So again, I'll go ahead and I'll start from the daily time frame. I'll see what kind of market I'm in. So whether I'm in a bearish market, a bullish market, or a consolidation or ranging market, whichever you want to call this, all the same thing. And I'll just start marking up my zones, just like how Jonathan was talking about. I'll start marking up my supports, my resistances, my minor ones, and I'll just start going down the time frame and, you know, trying to dissect the market a little bit, right? So we got one right here, a little bit, kind of, and then you want to zoom in and get these here. Okay. What I'll do also is like, I'll start putting down these arrows to kind of see where the market has impulsed or corrected. So that way I could get in on a trade. Let's say if I'm in a bearish market, get in on sells only. And so I'll just go with the trend, guys, just going with the trend and making sure I'm following the trend until the trend actually changes. And so here in this case, the trend did change. It broke right back into our zones. And now what I'm gonna do is just wait until it comes back down and to get a better entry, right where it tests here. All right. And then I'll just keep going down time frames and see what it's doing. And once it comes down here, I'm taking buys all the way, depending on what kind of confirmations I can see. And so types of confirmations I look for are breakouts and retests of zones. I'll use a fib retracement level. I'll definitely love wick rejection. So if there are wicks to the downside in this zone, that's a form of price action. And so it's rejecting this area of price. And so I know once I see a bunch of wicks coming down over here, I know it's going to go the opposite way. Reversal patterns also, head and shoulders patterns, inverted head and shoulders patterns. And if you guys don't know what head and shoulders patterns are, it's kind of like literally what it's called a head and shoulders. So you'll see like a shoulder right here, then you see like a little pop up, and then a shoulder right here, left, head, right. And you'll use this as a form of confirmation as well. And so you'll take a sell from here since it's a bearish market, right? But since we're only looking for buys now, since it broke right back into the support zone, what I'm gonna do is I'm gonna take a fib level, take it from the wick, from the bottom, using the wicks all the way up to the next wick. And as you can see, this zone right here is right in the sweet spot between the 50% level and the 61.8. The 38.2, the 50, the 61.8, and sometimes the 78.6 are key levels where you can take, trades for a impulsive move. So in this case, this was an impulsive move, and that's what I measured. And so its corrective move is going to be right around this area, right where it broke out. And so I have a breakout and retest, right? That's one form, one confirmation. Then I see once it comes down here, I'm going to see it's at a key level on my fibs. That's the second confirmation. And if I can see wick rejections in this area as well, that's my third confirmation to take the trade. Be confident in that trade and just take it all the way to the moon. All right. And so that's usually my go-to. Very rare when I use trend lines, but when I do, it's the same concept, guys. What I'll do is take my trend lines, make sure all the points connect. And once it breaks out of a trend, it'll come down, retest, which is right here. Then I have that wick that happened. That's 3 confirmations. I'm taking the trade all the way up. The markets, you can make this as simple or as complicated as you want, guys. It's very simple to trade. Things happen over and over and over in the market. And so if you just have, these tools and you use every tool possible to you and you research and you just practice, you'll see that these things happen over and over again. And when history repeats itself, it's bound to do it again, and you're able to be more confident in your trades and just take these type of trades. And if I were to take this trade, once it comes down here, that's a 200 pip move to the next zone. You know, I have tight stops because if it keeps going down, I'm not losing much because it's at an area of price where there's going to be a lot of action. And if it wants to, it could keep going down, but I'm going to keep my stops right here, right below it, to make sure I'm not risking much and my reward is a little bit bigger. And if on the off chance I'm wrong, you know, I'll just wait for a new opportunity. I'll go on to the next opportunity. So since I'm in Asian session, I'm going to be looking at primarily JPY pairs, right? So right here, we're in a bearish market. Go to a bullish market. Mark up my zones. Make sure they're accurate. And start going down time frames. Oops. See the little channel happening right here. So coming down more. Mark up some more zones. As you see, there's a lot of action in this zone right here. So what I'm gonna do is I'm just gonna wait. Patience is key. Just wait for it to keep going, come back up, retest, take my fibs, same thing over and over again, guys. 38.2. Take a trade down, boom, right to where my bottom trend line is, and that's where my next zone is. See, all things, if you just connect the dots, guys, you'll be able to, you know, see it more clearly, and you'll be able to take more trades, be more confident, put bigger lot sizes, and just overall win in this Forex market, you know. That's about everything that I can teach you guys because it's very simple. There isn't no, you know, magic strategy that you can do. You can use indicators, you can use all this other stuff, but when it comes to price action, it's mostly it's what the market's going to do and what your reaction are going to do, what your reaction is going to be once the market meets certain prices. Utilization of this Fibonacci tool is really good too, because you know it's going to come up to these fib levels with these zones, and it connects really perfectly. There's no telling what you can do in this market. So I think that's about it. That's all I can actually teach you guys. Jonathan pretty much covered all of the zones, and so my thing was just to go more in depth. And so I'm gonna go ahead and pass it back to Jeff. I appreciate you guys coming out. We're 94 participants, so that's extremely great. And so Jeff, you can go ahead and take over, man.
Great, man. Appreciate it. I got some questions for you. I know some people have some questions. I don't know if you want to go ahead and take them in. If you got some questions for Joshua here while he's on, go ahead and ask away real quick. Any questions? I got.
For sure, I'll take some questions if you guys have any questions. So at least 3 confirmations are good to take a trade. Yeah, most definitely. At least 3 confirmations. If you have more than 3 confirmations, best believe you're definitely wanna um, take get very confident with that trade. Do you guys have a trading journal and a compensation plan? I'm starting off with it. Personally, I use my charts as my trading journal. I mentally track my trades. Um, what's your risk? My risk is going to be really minimal. If I'm going by zone to zone, if I'm taking trades from zone to zone, I'm only risking mostly maybe 20 to 50 pips per trade. And then I'll definitely calculate what's my lot size going to be depending on how much pips I'm going to take. So if it's 20 to 50 pips and I have an account with $1,000 in it and I only want to risk maybe $100 of that account, then my pips, my lot size would be probably about maybe 0.10, 0.20, if it's 20 pips or 50 pips, depending on, exactly the pips are. When a candle retests into an area, which candle do you take as an entry? The following candle, or if I see, like, again, when a candle is making whips to the downside or making wicks to the upside on a zone, I'm taking it the opposite way. The more wicks that there is, the better, because it's just showing like, okay, it's just keep rejecting, keep rejecting, keep rejecting. And most of the time I'm taking my trades on the hourly or the 15-minute. So that's gonna answer Tyler Biddle's question. Do you break down to the 5-minute, 15 minutes to look for confirmations reacting? Yes, exactly. At least the hour 15-minute is what I go to. I see you kind of reverse engineered that last fib example. Can you go more in depth into the idea? Yeah, for sure. Let me just. Yeah, so when it comes to this fib right here, the move is not, for me, the move isn't completed yet. And so I'll take it to my next zone, right? And once it comes down here, I can already see when it corrects back up, the zone that is going to break out of is going to be either going to be the 38.2 or the 50% or one of these 3 levels. Most likely it will be the 38.2 because it's the bottom of the zone. And so that's where I'll be looking to trade. But if it comes up here or here, is even better. It's a better entry for me. And I already see it's probably going to go down more because of these wicks right here. So if I go zoom in, so you have 1, 2, 3 wicks. So that's more than enough for me to come to take a trade as well. So let me get back to chat. Perfect. The purpose of the fibs, again, the purpose of the fibs for me is just to find an entry and to be more accurate. Again, they're a form of confirmation for me. And so if my zone is within a fib level, that is going to determine what kind of lot size I'm going to put on this trade, how long I'm going to be in the trade, so on and so forth. And so the market is always moving in waves, in impulses and in corrections. And so that's why you always see a market is never going up, always going up forever. It's never going down forever. It needs to balance, right? And so this fib level or this Fibonacci 2 kind of like determines that. And so if it's going from 100% to 0%, it needs to come back to at least 38%, 50%, or 61.8 to keep going and continue its momentum. So you set a set. Do you set a limit order for that trade monitor? Can you discuss how you manage your trade entry and example? It is very rare when I take pending orders, just because I don't know if I don't know if the market is going to come up here. You know, not every trade is 100%. Um, I'd say it'll be 80%, 90% accurate, but never 100%. So I'll wait until it gets to this level and see what it does and watch the market. Me personally, um, for you guys, for those of you that can't be watching in the markets, that can't be looking on your computers or phones all day, you know, you might want to put a pending order. And if it goes a little bit, you know, a little bit out of profit, or it goes into a loss a little bit, it's fine. As long as you have the right idea, it's going to go your way regardless, especially if you have more than 3 confirmations. And so I'll take the trade, I'll market execution the trade here or here or here, depending on where it is, and manage the trade throughout the day, throughout the session, so on and so forth. One thing I might want to cover too is the best times to trade that I feel. And so if you guys want to write this stuff down, I could definitely give it to you. I'm going to go ahead and write it out. So everybody knows the sessions, I'm sure, on this webinar. A lot of people want to learn more about Forex and stuff, but you might have some trouble with timing, right? So everybody knows we have a New York session, we got Asian session, and then we have London session, right? New York session typically runs from 8 a.m. Eastern to 5 p.m., right? But what I've seen is that the best times where the best times that the market is most volatile and where you can see more opportunity is about from 8:30 a.m. to about 1 to 2 Eastern. So if you take a trade maybe at 8:30 a.m. and come out of it in profit at 1 or 2 p.m. Eastern, you're only in a trade for a couple hours, and you're out the trade and you're in profit for the day, right? Asian session typically runs from, I believe it's 3 to 4 p.m. I'm not really accurate on the trade, on the overall times. I think it runs to like maybe 2 a.m. somewhere around there. The best times that I've seen is about 8 p.m. Eastern, so about 11 p.m. Eastern for Asian session. And then London session runs about maybe, I think 12 a.m. About 6, no, so about 8. Because I know London overlaps New York, so that might not be accurate, but during London session, the best times to trade. You really focus on the best times to trade, guys. So forgive me if I'm a little off on the hours on these sessions overall. Best times to trade, best times is about, I'd say 2 a.m. It's about 5. And so you typically want to trade the currencies within these sessions. So you'll look at USDs, you'll be looking at Canadian dollar mostly. For Asian session, you'll look at AUD, NZD, JPY, sometimes Swiss franc. For London session, obviously, will be the euro. Euro and GBP, Great Britain pound. These are when, like, you know, the banks and hedge funds are moving money around during these times, because banks are open, everything is open at these locations. And so if you guys want to take that down, so that way you can kind of be a little bit more accurate on taking trades and getting out of trades maybe. I think that will help you guys a lot as well.
Awesome, man. Thank you, brother. Thank you for taking the time for sharing this knowledge. I just want to piggyback off something you said, and I think it's great. A lot of students were asking you if you put like, you know, pending orders, or how do you take your trades, and the way you explained it was, you know, the market hasn't made the move yet, but that's what you see. And I love to trade that way because the market, it may be 8 o'clock right now, but you have to trade like it's 9:30, because you have to be 2 steps ahead of the market. You have to be ahead of what's coming. See, the market is all about, like I said, perception and vantage point. If you can see what's going to happen, or what's the probability that something might happen in an hour and a half, 2 hours, or even tomorrow, you're going to have a much greater advantage. And that's the way that Joshua trades. He knew the wicks was his confirmation that the market was exhausted to the high, so it was going to come down. And if it's going to come down, he wants to know, where is it going to come down to, right? So I'm going to have my zone set, and I'm going to have zone 1 here, which is at the 50%, and zone 2 here, which is at my 0%, right? So the move hasn't been done yet, but I'm expecting the full move to happen. If I get full wick rejection, which is your second confirmation at the bottom, I'm taking this up to my 50 or my 618, and then that is trading ahead of the game. It means he's looking forward of what's happening in the market. So I love the way you trade, man. Great way of explaining it. Thank you for taking the time and answering some questions, man. Thank you once again. All right, guys. So I hope you guys learned something so far. You guys got the times there. Currently, we are in the Tokyo session. It is 8:52 p.m. Eastern Standard. JPY markets love to move right now. And I got the guy just to show you how to trade at a next level, all right? This is my good friend. I know this guy for, I want to say like 12 years, 13 years. We went to high school together. Me and his kid were in multiple ventures, businesses, entrepreneurs he's been like an entrepreneur for like 10 years. As a matter of fact, fun fact, he is the one that introduced me into Forex trading. Prior to that, I was already doing Bitcoin investing and Bitcoin trading, but he's the one that put me on into Forex trading. I'm forever grateful for him, and it's an honor to have him here. This guy is a co-founder of multiple companies. He's Viva TV. He is in the CBD business. He is working right now with mortgage brokers, refinances your home. He is a platinum leader in his company. He is a beast of a Forex trader, and he is here to teach you today about order blocks as well as market structure. All right. This is the perfect example, or the perfect guy to have here to show you guys how to trade order blocks and market structure. All right. His name is Mike Polanco. Brother, take it over. Go ahead and kill this.
Awesome. Guys, it's an absolute pleasure to be here teaming up with some of the giants in this game. It's an absolute pleasure to share the stage with you guys. So let me go ahead and get right in. Just go ahead and give me a 111 in the chat if you guys see my screen, just so I know. Great. Awesome. So currently, a ton of things that I want to share with you guys in regards to order blocks. And I wanted to show you an example of a trade that I took yesterday because of the order block presenting itself, giving me the proper opportunity to get into trades. Order blocks, guys, you guys want to get into higher time frame order blocks. Let me go and just make this a little bigger for you guys and get this over, right? So first and foremost, guys, an order block by definition is simply a bearish or bullish candle before the run. So let me go ahead and explain that, right? So you have a big bullish trend, right, coming into this area of resistance on the 4-hour. And what you want to mark up, guys, is the last bullish candle before the bearish run. You see that big bearish run, right? But you obviously want to catch it when it's happening and at the time that it's happening, right? So this is going to get down to, for those that are brand new, right? We went over support and resistance. We went over market structure and all the great things that Joshua went over, right? So now we're going to get to something a little more detailed, which is the actual candlesticks themselves and how you want to play the market off of those candlesticks. Let me go ahead and just delete those fibs because those are not going to be necessary for now. But you want to concentrate again on this last bullish candle before the bearish run, and then that's going to be considered a bearish order block. So any last bullish candle before a bearish run is your bearish order block. And then you want to do the opposite for maybe the move up when you're looking for buys, where you want to look for the last bearish candle before a bullish run for you to take advantage of where the market is going to go next. Now let's really dive in what is considered an actual order block. So how I map it up and mark it up, I usually just mark up this zone, right? And then extend it. You can use your tools by going into the settings here and just extending those all the way, just because you know that zone is going to be of significance. Okay. Now what I do is I take the order block and I say, okay, what is going on in the market? What I want to see is I want the market to give me an institutional sponsored move, right? Institutional sponsored move. What that means is that I'm looking for a big push away in the other direction from that order block, okay? So I'm looking for this to break this threshold right here, right? I'm looking for it to break and close under this order block. Now, if we see any push to the opposite direction, right, then this is just another bullish candle in that direction, okay? Nothing special about that. So once you're able to finally identify that the market is now moving away from this order block, this is now where you want to sit on your hands. And I'll show you some of the trades that I've taken this week. And let me tell you, I've hardly seen any red on my phone in quite a while, because I'm able to sit on your hands. I'm able to sit on my hands. And part of the thing that I really learned about when I started trading Forex was the patience, right? The patience that you need to have or need to build to in order to be successful. Now, what I do to map out my proper order block, right, to look at for my threshold on where I want to take this sell, I go, let me get right into it. And mind you, this is a 4-hour candle, right? So I take my fibs, and from high to low, so from the bottom of the candle, right, from the bottom of the candle to here, I mean, from the open of the candle to the close of the candle, I'm looking to map out where I'm going to take this next sell, right? So I map it out, and 50% is where you want to take it to. So this is your 50% threshold, right? Okay, 50% threshold is right there, right? So now I can delete this because I already got my threshold. So your area for looking for a sell is going to be under the 50%. So basically, let me go ahead and put this another color for you guys. Make it yellow, right? So it's going to be from the open of the candle to the 50% threshold is where I'm actually looking for an entry. As you saw here, we sat on our hands. We waited 4, 6, 8, 12. You know, we waited a while for this to come back into our order block and then trade away. Again, guys, this is a 4-hour chart. So just think about, if you were just able to sit on your hands, you're able to take home 163 pips for a 18 pip rejection, right? 18 pip down draw for 160 plus pips. Now let me go ahead and show you what really makes me really like any type of order block. Besides it breaking this threshold, which then validates this order block candle. So I'm going to go over this example of a bearish order block, guys. Then I'm going to go over the example of a bullish order block. But this bearish order block finally traded away. And what I loved about this structure was that it actually created, right? If this was the previous low, this is now giving us market structure, right? Close below this zone. Now it's giving us market structure. And another way that you can identify that it closed below the low is by using your line chart, because your line chart is actually going to tell you where the market actually closed. Okay? Very important. So now that you've identified that this is now lower, you now say, if this retraces, we are now going to be looking at a downtrend. If this retraces and does not break above the last high. So if this high does not get broken right up here, then we are not looking for a sell situation. We are no longer looking for a sell situation. Give me a sec, guys. I have my phone going off and I want to just go ahead and put it on airplane mode so I can give you guys my full undivided attention. Okay, great. So now on this larger time frame, I saw that this area right here gave me a ton of structure, right? Ton of structure. And this also acts anytime you have a bullish move to the upside, right? A bearish move to the downside, the opposite candles now act as order blocks. So if you're in a bullish move up, all the bearish candles are now levels of support and or resistance. Keep that in mind. So we have this big bullish move up, moving up, moving up, moving up, looks like unbothered, and just continuing to give you this proper market structure of higher highs, lower lows, higher highs and lower highs, higher highs and lower highs, higher highs and lower highs, until it then breaks structure here. Now the market comes up, retests this order block, and now continues to respect order blocks on the way down. So the same candles that it gave you before, you are now looking to take those candles as a zone that it will be respected in the future, okay? So now we have this order block, and what I want you guys to see when you guys are looking at your charts is how order blocks are gonna give you this thing called institutional order flow, where you're going to trade from order block to order block, okay? So now we took this trade here at this order block that was very beautiful. We sat on it, we waited, and then what happened? We came back in to these lows, right? We came back into these lows, traded into the order block. Now we are looking for the next order block. Where is our next order block? It is the next, right? And this is not an order block because it did not break the threshold, right? It did not break this previous open. It did not break the open. It wicked it and went back up, but it did not break the open. So now what we're looking for, right? We just took this trade. So all of this is irrelevant. We just took this trade, finally got into 163 pips in profit. Now we're looking for our next order block. What ended up happening? We then broke the threshold again at the low. The low now got rated. Now we're looking for our next order block candle. Our next order block candle is right here. Do you guys see where this market broke through the threshold, broke below, and came back up to revisit our order block yet again? Guys, remember, it does not have to always give you a 50% threshold, but if it's there, you can take the trade and set stops above the candle, because if it breaks above and closes, the order block has been invalidated. Okay? Invalid order block at that point. So now we took this trade. Now this created some sort of blocks here, right? This created blocks here at this area. As you see that it respected here, even though it wicked above, it always closed below, except for this example right here, but it still came down to respect it. And this is a trade I took yesterday, guys. I saw that this gave us a 50 on order block, right? And gave us a few trades here. Now let me show you. The 50% is your threshold. So I took the 50% of that order block, and look what happened. Gave you a W off of that order block. Came back down, traded into the order block, and we were able to take this trade last night. Actually happened around, for some reason, this made the move around London session, which was about 1:30, 2 o'clock in the morning, right? Oh, this was at 3 in the morning, exactly. And I was looking at it, I was like, oh, wow, UCAT is actually making a nice little move, right? So now that we have established that on the higher time frame, we're looking for this order block to happen. Now let's go down to a lower time frame to see why we took the trade, to be just that more precise, right? So let's take a look at this candle on the 15-minute, because this did some really interesting stuff last night that really made it happen, right? So here we have this inverted head and shoulders that it was creating. What it did was it created this head right down here by leaving this zone, okay? And what I saw was that now it was trading back in to this price, not continuing down. So I said, wow, it's at a 4-hour order block, right? It's also giving me order blocks and an inverted head and shoulder on the 15-minute time frame. So now we have this 15-minute order block, and mind you guys, higher time frame order blocks are going to give you obviously a more valid move. But as soon as I saw, guys, that this trade broke through the threshold, all I wanted it to do was come back and retest my 50%. And we went ahead and took that last night for a sniper entry here at the 50%. Let me make that, let me show you guys here at a closer level what happens. Came back, tested this twice, but this gave us the 50%. Did this ever come back? No. This move is currently up about 90 something pips right now. I know because I'm in it. And we are up, oh no, actually, yeah, it's 107 pips. All right, already up 120 since last night. So in 11 hours, guys, you were able to take whatever account you had, right? Either if you're trading a micro, a mini, a standard, right? You could have potentially made $1,200 on a standard right here. Or you're trading a mini, still $120 from last night, just off of searching for these order block candles. So this is an example of a bullish order block, and that was an example. The other example was an example of a bearish order block. Now, when it comes to market structure, again, you want it not to break lower than that previous low. So I also took that into consideration, guys. I took that into consideration. I said, I do not want this to break below, even though it's past my 50%. I'm looking at a higher time frame order block, and I don't want it to trade below. And it did not. It actually did something we call an inverted teacup, where it just hits the same zone and then reacts right off of it. And we are taking this up, on our fib extensions, just like Josh trades, right? He uses those fibs to identify where he wants to take it. Obviously, I'm not using fibs in this instant as how he's doing it. I'm only using it to measure out the candle and how we can identify these order blocks. Now, these order blocks are going to give you a precise entry that you want to take. Let's look at another example. Let's look at another example, because I'm in also I'm in I'm in currently an XRP, and I ended up taking this order block right here. So this gave us a bullish order block, right? This candle might have not broken through this zone, but this candle did. And this candle did as well, and this candle did, and all this moving to the upside. It's just preparing you to sit on your hands. So what I did was I took my fibs yet again, measured out this candle, and then got into Ripple at the 50% threshold. Once I saw that, I saw this big bullish candle. Once I saw that, I got in at the 50%, saw this big bullish candle, and knew it was valid. Guys, one rule of thumb, order blocks usually have strong rejections off of those zones. They want to move away from that price fast because they don't want other people in that trade. They are the only ones that want to eat. I mean the institution, market makers, things like that. They're the only ones that want to eat off this trade, right? So I saw this trade and went ahead and took it. And let me show you guys another example of how I use my order blocks. GJ here on the 4-hour as well gave me this order block on the 4-hour. Did it break my threshold? Yes, it did. What did I do? All I did was wait for it to break the 30%, the 50% threshold, got in right here, right at that wick, came back up, played around a little bit. If you're going to play with GJ, you know you got to have a 50% stop loss. And then it went into my direction, currently up about 44 pips. So guys, if you guys have any other questions for me, I'm going to go ahead in the chat. I know you guys probably have some questions for me. Can you explain how you place your fibs that you use? All right, cool. Awesome. So I'll go ahead and go through that. So Luna, very simple, right? Forget these zones because you guys already know it's there. If I see that this zone broke through the threshold, right? It finally broke through the threshold. And not only did it break through this threshold, but it broke below structure, which is this threshold. Finally broke below structure. So now I'm waiting for that move up. So guys, very simple. How do I measure them out? I take my fibs from the open to close of the candle, not the wicks, not the wicks. I take it from open to close, and I am right here with it. So that's where I took my trade, set that pending order, right? Some people trade with pending orders, some people don't. If I'm trading order blocks, I'm trading with pending orders because I know that if it does break above, then I'm gone. I'm not looking for any other trade, right? Again, this also traded into this order block as well. So you could have used any one of these. This order block as well was very valid as well. So I knew, guys, I knew that this zone right in this area was going to give me some sort of rejection. Even if it was 40 pips, 50 pips, because you know GJ is going to move. GJ is going to move, right? So I have GJ coming down, playing down here into these areas, which is just coming back down to retest. Just like Josh said, right? We want to wait for that break and retest, and we want to go into this area to then see what the market wants to do. So as soon as the market comes back down to these areas, then we'll take a look at it, see what the market wants to do. Let me go ahead and address some more questions. All right, 50% of the candle body is the entire point of the retest of that candle. Okay, cool, makes sense. All right, cool. I guess I went through it. So breaker blocks are gonna happen as the break and retest, right? So if you have this move to the upside, right? Let me explain that, right? If you have this move to the upside, and then it comes up, trades into this order block, and then trades below, now we have brand new market structure. Now we have a lower low, right? This low is lower than that low. So now we understand that we are now in a downtrend. We are now in a downtrend when this market wants to come down. One more time on the bearish order blocks. Awesome. I'll go ahead and do that. Not a problem, right? But let me go ahead and address this breaker block situation, right? So very simple. If this market trades up, remember that any market trading up is going to use the bearish candles as order blocks, right? So what did it do? Now let's take this bearish candle and drag it across, right? Let's take that bearish candle and drag it across. Where do we have our breaker? It finally broke below. Now you're in a downtrend. Now you're using this blue candle, right? This blue candle as the breaker block. Let's go ahead and measure that out. Did you get in on the 50% threshold, and did it move? Because you already know, you know your bias. You know your bias already. You know that this now respecting this order block and breaking below is now a downtrend. So there's no reason why you should be looking at an up move. No reason at all. There's no reason. So now you're now looking for a break and retest of this M, right? Or mitigation block, or however you understand it, right? This break of this M back into the zone to take it back away. And it gave you multiple entries here that you could have took over and over and over again. Because as you know, GJ does move fairly quickly. So let's go over the example of a bearish order block. Let's go to a pair. And again, this is pretty much the same thing, right? Same thing on GU, right? Last bullish candle. And guys, usually when you see the last bullish candle before a bearish run, sometimes they're big. They're really big candles, because those are manipulation candles. In those candles, the banks are already selling. Banks are selling when you're still buying this, banks are selling that already. Banks are getting into positions here. Banks are getting into positions here, somewhere in that area, to take advantage of the order block that they know is coming, right? So banks are gonna give you an institutionally sponsored move away from the order block. That's not us moving this market. That's the banks. So now we know that we need to start moving away, right? So again, you want to use, sometimes what I like to do is I don't use sometimes just one candle. I use multiple, because the bigger the candle, the more manipulation they want, right? So if you're, usually these three candles, right, are if you have a move to the upside like this, these three candles are like kind of to induce you to continue buying when everyone else is selling. So bearish order block example, last bullish order block before bearish run, did it break the threshold? It did. It did it right here, right? From this move, it broke the threshold and came back up. This now bearish candle, remember, acts as a breaker. So now you're looking for a retest at this zone, So now what I would want to see here for GU is for it to break and retest. If not, it could reject off of this zone and continue to the upside. So I'll be taking a look at that on my own. But if you guys have any questions, I think I'm pretty much concluded with what I got. Guys, if you guys anytime you guys have questions about order blocks, you guys can reach out to me. My Instagram is Mike Polanco NYC. Guys, reach out to me. I'll be able to break down order blocks for you guys anytime you guys ask. But Jeff, it's been an absolute pleasure. Thank you for allowing me to be on here and educating the masses with you guys. Again, it's been an absolute pleasure.
That's great, man. I appreciate you being on, brother. That was a great lesson you just gave. Definitely a lot of value in there, and definitely saw some great setups, easy to spot, easy to see that market, just kind of make it structure, put this position on that 50 on the order block, and go ahead and give you that entry, which were just pretty much amazing. Those great entries is pretty much what makes them, what can make or break you in this market. You know, a wrong entry can destroy you, and a bad stop loss. So the fact that those pretty much give you an accurate entry into the market is amazing. It's amazing to see that go. All right. So guys, I hope you guys learned. Hope you guys took some notes and understood order blocks and market structure. Because I'll be honest with you guys, I don't trade order blocks that much. For me, I just call it zones, and I don't pretty much look into the depths of it. I go mostly based on rejection, which is pretty much what Mike does, but he takes it a step further to pretty much become more accurate in the market, and it sees how it plays out. So that was a great entry. All right, guys. So I'm gonna go ahead and take over now, and I'm gonna finish. I'm gonna be the last one going over here, and I'm gonna talk about a few things are going on. All right. First, I'm gonna talk about Bitcoin and what's going on with Bitcoin. I'm gonna talk about US 30, known as the Dow Jones, and the crucial moment and impact that it's having right now in the US economy. And we're going to talk about as well as what's coming up with Bitcoin, which is called a Bitcoin halving, which is happening anywhere between May 11th and May 12th, which is in a few days. And how is that going to impact the markets, as well as the amount of money being poured into Bitcoin right now? For those of you guys that don't watch the news, I mean, I love to watch financial news and see what's going on. The CEO of Coinbase actually reported that for the first time, they've been seeing consecutive number of crypto purchases equaling $1,200, which is people just putting their money, their stimulus money into cryptocurrency as a way to secure what's coming next, right? Robert Kiyosaki went on and said, listen, you got to buy silver, you got to buy gold, you got to buy Bitcoin, because right now the way that the US dollar is behaving or being forced to behave, it's going to get to a point where it's losing value so quickly that it's not going to have time to bail people out. You know, they're going to print all this money. Right now, it's estimated to print anywhere near $20 trillion. We're coming up with the second stimulus for small businesses at $500 billion. 2.3 was just printed out for businesses, individuals, as well as corporations. We have Q1 just finished, which means that, Apple reported their Q1 earnings today. And as a matter of fact, they were 13% over what they expected. So that was a shocker. But remember, a lot of these companies are based on fluff, all right? For example, I'm going to go ahead and take a look. I'm going to go and jump into US 30 really quick, but I want to start off with Bitcoin. But I want to show you guys something really quick. All right, we had a huge recession back in 2008, okay? And ever since that recession happened, we have been seeing this market climb, all right? US 30 market has been climbing since 2008, but there hasn't really been much growth in the economy. What there has been is fluff, all right? I'll give you guys an example. Say you are a business owner. Say you own Apple, and you, before 2008, were generating $300 billion every 2 quarters, right? Now, let's say that the recession happens, but you're still making that amount of money every month, every 2 quarters, but now your staff is down to 25%. Now you're not doing businesses with South Korea. Now you're cutting business, all right? That's not growth, that's fluff, right? That's retraction, right? That's not expansion. You're not growing your business, you're retracting your business to show growth. And that's what's happening right now with this market, all right? And I expect that to continue as this bailout keeps happening, all right? So I'm gonna get a little bit more into that later, but first I'm gonna talk about Bitcoin. Right now, Bitcoin has been on a rally for the last 2 days. It has gone up over $2,000 in value. It's just going up crazy. The strength continues to go up ever since April. I mean, the whole month of April, we pretty much doubled. We are at 110% growth since the beginning of April in this market. We were all the way down here at, where are we? All the way down here in the 6,000s, 4,000s, and the market just continues to climb, all right? Now, here's what's happening with Bitcoin. Bitcoin is considered digital gold, all right? It is going to be the future of currencies. It is going to be what we are going to use to bail ourselves out. It was made back in 2009 just for that reason of how can I say this, of preventing this from happening again. All right, preventing this from pretty much becoming what happened back in 2008. Right, in 2008, the recession happened because a lot of things were kept under the covers, and it caused a lot of drama. You know, a lot of people they lost their houses. You know, they lost their jobs. Right now, pensions right now they lost about 30% value. And if you have a 401k, I mean, have you seen your 401k in the last month? It looks awful, right? I guarantee you, it looks awful. They just passed an act where they're allowing you to withdraw your 401k early, avoid the 10% fee, but then that tax you're gonna pay early is diverted into. I mean, it's divided into 3 years, just to get people to pull their 401ks out. Now, why is the government giving us stimulus packages? All right, a lot of you guys may think that this is just to help you, to aid you, to help. $1,200 is not going to help you do anything. All right, it's today's world, especially if you live in New York City or these high states, that's like your 1-bedroom rent, okay, and that's not going to support anything for any family. But the reason why they do that is they force money to be put out in the markets. All right, and if they're giving you $1,200, Ruth Chris, which is a fact, right, that steakhouse received about $25 million bailout. And what they do is that they keep that investor money floating, right? They want to keep the stock up. So the reason why they print so much money out is because they want to motivate investors to keep money in the markets, right? They want to make sure that the market keeps climbing. And if they do that, what happens is that the market, these people already know there's a crash coming, but they're not ready for it yet because all of this is on steroids due to coronavirus, right? The virus is just impacting us a lot quicker. We just had 3.4 million reported unemployed from last week. We are a total of 30 million unemployed. That's just the ones that filed for unemployment. But I want to show you guys something really quick. If you guys go on this website called usdebtclock.com, it will show you the actual number of people that are unemployed, right? And right now that number stands at 39.1 million people unemployed right now. Officially unemployed, which are the ones that are reported, is 36.4, where there's a total of nearly 40 million people unemployed, all right? The GDP was released yesterday, which is the gross domestic product. That was actually, we lost 4% value in GDP last month. And you guys can see that here, all right? It's losing about $1 million every 10 seconds in the GDP, all right? When I first spoke about this with my students, we were about $23 trillion. Now we are at $21 trillion. This continues to collapse, and it's going to impact a lot of families. People don't see this, all right? The U.S. federal tax revenue is also decreasing. The U.S. national debt went from 23 trillion to 24 trillion in the last 2 months. It's this money we keep owing. Now, I want you guys to pay attention to something really cool. Right here, we have something called dollar to crypto ratio. When this first came out here, this was about back in February, the dollar to crypto ratio was about $96 to 1 crypto, right? Right now it's 74.56, which means that the dollar is losing tremendous value even to cryptocurrency, and cryptocurrency is not pretty much looked at by the government as a form of currency, right? They call it gambling or real estate assets, whatever they want to call it. But this here is showing the true value of cryptocurrency growing as the dollar weakens. And this is going to be huge. People are looking for ways to, put their money in different things because they know the US dollar is not going to be worth anything if they keep printing money like this. I shared an article today with my students that said that the US government right now has just allowed limitless printing, which means they could print out 100 billion, million, trillion if they want to, and with no consequences. But that's not the way, that's not how you make an economy strong. That's not how it's all based on interest rates. Right now, interest rates are still at zero. All right, they were soon to go to negative, and once they go into negative, we go gone from there. Look what happened to oil. They were literally paying you to take oil off their inventory because there was too much, and that was just the CFD the future contracts. All right, now what's happening with Bitcoin? Bitcoin is climbing because there's so much money and volume being put into Bitcoin because of what's coming. Something's coming called the Bitcoin halving. Now, what is the Bitcoin halving? Now, take notes, write this down, because this is going to continue to happen for the life of Bitcoin, right? The first time Bitcoin halved was in 2012. All right, I'm going to go ahead and show it to you guys right here. This is happening in 11 days and 2 minutes, which is pretty much May 12th. All right. We need to reach about 630,000 blocks, which we are only almost there for this to happen. Now, what is Bitcoin halving, right? In 2012, every 10 minutes, there is 50 Bitcoins generated, right? That was in 2012. When Bitcoin halved for the first time, that generation dropped from 50 Bitcoins every 10 minutes to 25 Bitcoins every 10 minutes. All right, now what does that do? You're removing supply from a highly demanded market, which increases the price of that supply, right? Now, what happened here? I'm gonna go ahead and share this so you guys can see it. I want to show you guys this picture that I have right here. I don't know if you guys can see it. Let me go ahead and put it up. All right, I don't know if you guys can see that, but this here pretty much says, after 2012, when Bitcoin halved, the price of Bitcoin at that one moment was $182.22. A year later, after it halved, it went all the way up to $510, which is over 200% growth. All right. In 2016, when the second halving happened, the second halving took the 25 Bitcoins that were being generated every 10 minutes and it dropped it to 12.5. Now, what is it doing? It's creating more demand for an even smaller supply, right? It's the simple rules of supply and demand. And less supply, more demand, higher prices, right? Now, 12.5 Bitcoins every 10 minutes, which means it's being generated at a much slower rate, all right? Now, after this happened, the price of Bitcoin again was at $661.45. 1 year after the halving, the price of Bitcoin went up to $2,576, which was 2017. But in reality, the price of Bitcoin after 18 months after the halving, it went up to almost $20,000. So that was a ridiculous amount of returns, easily over 500% return for the halving. Now, 2020 halving happening May 11th, we're looking at this to have anywhere between $9,000 to $10,000, right? Now, when it halves, we're gonna go from 12.5 Bitcoins every 10 minutes to 6.25 Bitcoins every 10 minutes. Again, diminishing the supply, increasing the demand, as well as increasing prices in that market. So what is this gonna mean to you? This means right now is the best time to buy cryptocurrency, buy Bitcoin. The best way to do it, use an app, all right? So a lot of you guys have been asking me, what do I use? So I'm gonna give you guys a little tip. A lot of you guys love to buy Bitcoin through an app called Coinbase, right? Binance was the way to do it, but now they don't allow US markets to buy through Binance. Just hold it in there. Unless you're outside of the US, you can still use Binance. But there's an app called Voyager. I'm gonna go ahead and type it for you guys right here. And if you guys want a referral link that will give you free $25 Bitcoin, let me know and I'll go ahead and send that to you. Voyager does not work, however, in New York. It does not work in New York. It works anywhere else except New York. So if you're in New York, just put an address of a family member in Florida. That's what I did when I was in New York. And I live here in Florida, so I'm doing it the right way now. But what happens with Voyager is, first of all, it's less fees. Yes, it is secured. And number two, you get paid interest, all right? Now, there's a couple of other apps that do that, but they're not US based, and I don't really trust them because it all depends on not Bitcoin, but also Ethereum. But I want to focus just on the Bitcoin here. So it pays you 5% interest if you have 0.1 Bitcoin in your wallet, 0.01 Bitcoin in your wallet, which right now is about $1,000, right? So if you have $1,000 in Bitcoin, you're gonna make 5% interest. Guys, they pay me interest every month. Just last month, they gave me 10 grand in Bitcoin because I held the Bitcoins for the month of, was it March, right? It's a simple way to have your money sit in what you call a safe account or whatever, or a savings account. Put it into there, let it sit, let it gain you interest. I mean, banks right now are paying you 0.125. And on top of that, a lot of you guys probably receive emails like I did from my bank saying, hey, we're cutting your interest rate in half. And I'm like, can you even cut it smaller than what it is? So put it in Bitcoin, buy it in Voyager, put your money in there, let it grow, as well as let it collect interest, all right? Let it collect interest because it's 5%, or I think right now they dropped it to 4%, but it's still a good amount of interest to earn every month just by having cryptocurrency sit there. All right. So easy money. I mean, if you got 10 grand, put it in there, you're going to see money coming in, $500, $400 every single month just by having that cryptocurrency sit there. All right. So that is what Bitcoin halving is. And we're going to see this happen again on May 11th. I know between May 11th and May 12th, depending on the blocks, if they hit earlier, if they hit a little bit later. All right. So buy Bitcoin right now, use it through Voyager, and then we go from there. Now with Bitcoin, what's happening is that we're facing right now what's called an impulse move. All right. Which is Bitcoin trying to push to the highest point it can before, yes, this market will come down one more time because it has to regulate itself, right? No market, without any volatility in any market, no money can be made, all right? And that explains why recessions happen, why Great Depressions happen, why market crashes happen, right? The housing market will be the market that's gonna crash next, as well as the commercial property markets. When they crash, you're gonna see the economy go even lower than the recession. We're gonna be pushed back into a Great Depression one more time based on the amount of people that we have printing money and promising. Look what happened. I don't know if and does anyone here own a home? If you own a home, you probably know this, right? You probably got a letter from your bank saying, hey, you can defer your payments 3 months, no problem, right? Cool, no problem. And you sign that paper right away. But you don't know is that in 3 months, you're gonna get charged 3 mortgage payments and you're gonna be charged with interest, right? And if you don't pay them right there, you are already halfway through the foreclosure process, because foreclosure process is a minimum of anywhere between 3 to 6 months. Right now, you're literally halfway by not paying 3 months and being deferred 3 months. And I think that's not fair. What they should do is put those 3 months at the end of your loan, right? They're still gonna get their money, and then just have you continue it on, just extend the life of the loan. But right now, the greed is what's gonna make this economy crash. So once the housing market goes down, we get pushed down into a deeper recession, and that's what's gonna cause the next big crash. All right, so let's talk about US 30 and what's happening with US 30, right? Now, really quick basics. US 30 is the Dow Jones 30, the Dow Jones, right? The 30 fastest growing company in the US. We have Apple, Johnson & Johnson, Home Depot, Dell. All those companies are part of the US 30, right? And right now they're starting to report Q1 earnings. Now, Q1 earnings were pretty good until about March, mid-April to March, when a lot of these companies were laying off employees, asking for corporate bailouts, which they did receive. American Airlines was the last one to, they just reported they lost $2.2 billion in Q1 because they have to lay off so many employees. And it's all gonna impact the US 30 economy, right? The Dow Jones economy. Now, in a nutshell, is Q1 earnings were done. They're gonna be coming out. And what the government doesn't wanna see is they don't wanna see people pull their money out of their investments, right? They don't wanna see what you call the investing whales pull money out of the Dow Jones. Because if that happens, right, you get movements like this, right? You get movements to come down. This was all fear. When we crashed from 29,000 all the way down to about 18,000, if you want to trade US 30, which is, if you guys seen the way I trade, this is pretty much all I love to trade. If you would have taken the ride from 29,000 all the way down to about 18,000, that would have been 113,000 pips on a move that would have lasted you a whole month, right? Now, we did catch some pips on the way down here. We didn't kick it all the way. But we traded this zone to zone. All right, now I'm gonna go ahead and show you how I trade US 30 zone to zone in a little bit. But I'm gonna keep talking about what is gonna happen in terms of monetary policy involving US 30 and what's driving this market. All right, so what happens? They don't want the investors to pull money out. What they want to do is force investors to keep money in, motivate them to keep money in, right? So what do? They drop interest rates, right? They keep dropping interest rates. They go ahead and print out stimulus packages. They go ahead and promise you they're going to bail your company out. They're going to tell you your house payment is going to be deferred. Small business loans, CARES Act. Right now, the small business loan, you could get up to $75,000 with zero interest being paid back in 6 years. Everyone's going to jump into that, right? So they're looking to do that as well. And what they want is to let this market ride up as much as it can because they know it's going to crash. But what happens is that they want it to crash at the right time, not now, because these guys, this market again is created by banks, right? It's big whales that move this market. The market makers, the institutional traders know what's going to happen. right? And if it's not ready for it to happen yet, they're not gonna let it happen, right? This market can be manipulated all the way to the top or all the way to the bottom, right? I'll give you guys an example. We'll go ahead and look at gold today. All right, look at gold today. See, it was a bearish market today. Look at US30 today, right? Bearish market today. Look at DXY today. Bearish market today. What does that mean? This is all being pushed by fluff. These markets should not be moving in the same direction ever. All right, because gold is no longer, the dollar is no longer part of the gold standard, right? It moves in balance to gold. If gold goes up, dollar comes down, and vice versa. But right now they're both coming down because they're forcing fake fluff onto this with all of these earnings and all of this money printed out. All right. Now let me show you what I see happening with US30. With US30, pretty simple. I'm gonna go ahead and draw some fibs and make this absolutely basic for you guys as well with my zone. I'm gonna go ahead and clear all of this out. Looking at the 1-day chart with this market, and I'm not gonna look at any news. We're gonna keep the fundamentals out and go strictly on technicals, right? We're gonna go ahead and fit this market out from high to low based on the direction where it's going. So we're gonna go to our high point right here and drop it all the way to the bottom of this wick, stand it out so you guys can see where the market is going. All right. Now, I always call these the hot zones. The hot zones is going to be anywhere between our 618 zone, midway, right here, all the way to 38, right? This is your hot zone, right? It's a pretty big area, but you want to make sure it gives you guys a bigger range to get into, right? Whether you want to let it come up all the way to the high and get a better entry, or know where it's rejecting early and get in before you miss the move, right? Now, personally, I have a magic number, and my students know this. 27,000 points is a US30 magic number. We have been trading this since last year. This point helped us make a lot of money in the market by simply trading off that key level. 27,000 is going to be my 786 retracement zone right around here. Now, usually markets will go ahead and come up, right? They'll come up, they'll hit their zone, they'll continue to come up, right? Slowly climb up, come up to a zone. Now, this is going to be the hot zone where it's going to retrace, but I'll go ahead and give you one of these. Boop, weak entry, come back down, right? Now, what happens is that a lot of money is going to be pooled right around here, all right? It's been happening since last year. 27,000 points is a magic number for US30. Once it hits that zone, I'm expecting a massive sell-off. Now, it's going to be similar to what I called Bloody December. It just didn't happen until March. It was delayed, all right? And I'm expecting this market to drop all the way to at least 15,000 points, all right? The GDP also expecting it to drop to about 18 trillion and below that. When we were in the recession in 2008, the GDP was at 18 trillion, right? For 2020, when we entered this recession or this depression, we're only looking to be anywhere between 18 and 19 trillion dollars. Once that GDP is there, we are officially in a recession, and anything below that will push us further into a depression, causing more inflation, higher printouts, more unemployment, and stuff like that. So we don't have to think about it. The more money we print, the less GDP we have, the lower this number drops, and the quicker we get into what you call a recession or depression. And it's going to cost, a lot of jobs and a lot of stuff happening in the market. So back to US30, this market coming back down to at least 15,000. Now, this is not going to be a retracement for a W. Personally, I mean, it could be. Like Joshua said, he plays the markets 2 steps ahead. You could do it either way, right? So the way I do it is this. We're going to go ahead and play the vantage point game, right? So we're going to go ahead and see multiple outcomes of what this market can do. I'm going to go ahead and remove this box and make it clear, right? Now we're going to go plan A and plan B, right? So plan A is going to be this. We're going to wait till market climbs up to about 27,000, right? And once that comes, do one of 2 ways. If you're a limit order trader, you can get in, put your sell limit on this, let it ride down and follow it, and then just, think of other pairs to trade. If you're a trader like me, I like to constantly watch my markets and know where my price is at and not enter it, because I don't want to enter a trade and sometimes it might give me a little bit more pullback, all right? So boom, enter here, write this down to my last TP being 15,000, but I'm gonna play this zone by zone. So what am I gonna do? I'm gonna go ahead and play right here, TP1, TP2, TP3, TP4, TP5, and so on and so forth, so I get to 15,000. Now, why do I do this with US 30? US 30 is an extremely volatile market. I'm gonna show you guys what that means, right? If I'm trading for 786 down to 618, right? That's going to be right there, a 19,000 pip move. Now, you can catch the whole move, you can catch half of it, or not catch any at all and wait for the next one, right? So then you got 19,000 here. Then you go to the next one after that, zone to zone. You might close your trade out, let it ride out even longer. And you got 12,000 here, all right? And you want to go ahead and do the next one. Then you got 13,000 there, right? So this is doing it on a daily chart, guys. When I was growing my account last year, I did this all on the 1 hour and the 15-minute, all right? And the way I did it, I cleared my chart out from what it looked like, but I was trading this market back to when it was in the, where was it? It was like in the 21,000, 20,000, and so on and so forth. I traded all of these drops. We traded all of these drops when it happened to the Federal Reserve cutting the interest rates, cutting them one more time here. Playing off the FOMC meetings they have like 30 minutes after, trying to build it up and then having it crash one more time. We took all of this trade down here, and then we took all of this trade down here. We even trade consolidation when the market starts to range. The market ranges in a pretty big move. Like this, we're looking at the 4 hour and the 10,000 pip range and 47-day extension. So let's break it down even smaller, right? We'll go into 15-minute time frames, right? 15-minute time frame. Go to today, all right? Now let's do some simple market structure here really quick. I'm gonna go ahead and I'm gonna zone out my market. Just looking at this zone, right? Here we're looking anywhere between 3 o'clock and where we are right now. Now we're gonna go ahead and go to our high, go to our low, find out our key levels, right? So the key level, I'm gonna make it into a zone. This could be a wider zone right here. All right, it's gonna be my key level right here, right? Now, pretty simple. Now the chart makes a little bit more sense because now you took your area, you zoned it out, and now you know what you're looking for. All right, so what are we gonna do here? Market came down, push back up. Right now, if you're gonna go ahead and draw fibs, go ahead and do your fibs, right? Now, where did it pull back up to? Again, hot zone 50%, we trace back down, now it's at the 23%. Now, what I wanna see is this. Again, plan A and plan B. I'm gonna have either the market break here and then take a sell on confirmation candle closure to down here, plan A, right? Continuing, and then take a buy here when I have confirmation rejection like we did right here, into confirmation rejection candle and take it back up to the 50%. Right now, why 50%? 50% is two things. One is my hot zone for the fibs, and it's also my key level in rejection and confirmation patterns right here. Now, what makes this price key level? Now you get deeper into the charts, right? You look at it in smaller finite movements, right? We're gonna go ahead and say, okay, we got a wick rejection here, 1, right? We have 1, 2, 3, then price comes back up. Now, where does it come back to? That same zone, key level being loved, comes back up, right? Now it comes back down. Where does it come back down to? Before it breaks through it, it gives me a nice, beautiful doji candle, right? Nice wick to both sides, gives me a massive bearish breakout. Now it continues on upward, right? Now that floor is now my ceiling. I go from the second floor to the first floor. And on the first floor, I'm gonna reject this candle, goes up. Where's it gonna go to? My previous key level that was a resistance and now it turns into a support. Now it comes back down. Now we're here. Now you wanna go ahead and zoom in even stronger, right? Here we have another key level in just this area. We have a lot of wick rejection here, a lot of what you call delayed movement, or I don't want to say indecision because it moves, but it's delayed movement here. The market wants to pretty much see where the money is going and take it in that direction. So now what happens? The money comes up, rejects off this price. It wants to move away from it, comes back down. Now it's here. Now we're in a 15-minute time frame. We have 9 minutes on this candle. If this candle closes below this price, and then your next candle closes below the price, you can go ahead and enter that candle when it has 1 minute left. All right, it'll probably be down here, or it'll give you a rejection of a wick up here with a little doji body, kind of like this, right? Only that is bearish, and then continue on down here, right? Once it gets here, if it rejects and it gives you a bullish pattern rejection right here, you go ahead and take it up for a buy, and you can do TP1 to 23% or TP2 to 50%, right? That's how I trade this market. We trade it zone to zone. You don't have to trade a nice long swing trade on a 4-hour, on a 1 day. Do this all in a 15-minute time frame. Take quick trades because they're gonna pay you out a lot of money. Now, the downside to US 30 is 2 things. One, you gotta have capital to trade this account. So I always say this: your main goal when you're trading Forex, right? If you're starting, or if you never traded US 30 before, is build capital, right? Trade what you know, trade order blocks, trade, get your confirmations in, put your fibs in whatever you got to put them in, and make your profit, right? And build that account up. Because I'll say this: you could trade US 30 with a $500 account, no problem. But the thing is that if you take an L, or if that drawdown is too large, it can blow your account. Now you could do it 1,000 as well. It will help. It's a little bit better, but you're looking at 1,000 up. You want to be in 1,000, north of $1,000 to trade US 30 safely, and make sure you can scalp it, or pretty much snipe these trades. What I call an apex trade right here in a 15-minute time frame. Trade it zone to zone, right? If you have to use, you could draw your own zones out, or you can use the fib tool to help you understand this market, right? Now let's continue on, and let's say we have our plan A here, came up here, rejected down here, right? Comes back down, closes below this. I'm gonna take my buy here, take it all the way to 23% TP1, 50% TP2. Now you can go ahead and throw a TP3. Why? Because this market can go ahead literally and throw you a structure for a, let me just get this out the way. A structure for a W pattern right here, right? You come back down, retest in the middle, come back down this way, and then break through that 50, which is where price came back down to, and continue on upwards, and retest maybe in the 0 or the 88.6%, right? You can see this market do this in a 15-minute time frame. Now, if you go ahead and take the short from where it is right now, from 23 all the way to the bottom of the 0, that's a 960 pip move. If you do it the opposite direction, taking it all the way to 50, take it back up for another 2,000, and then all the way full formation for 3,600. And that's doing it in a 15-minute time frame, guys. Now, this right here that I just showed you, that's how you build your account up fast. All right, that's how I grew my account. It's the easiest way to do it. And one of the things that I found beneficial about trading like this is that it keeps you off the charts, right? I always say you don't want to spend too much time in the charts. Think of the chart as a gambling table, right? If you guys ever gambled, play poker, play roulette or whatever, you play roulette, and you always come to a point where any game you play in that table, whether it's poker, roulette, or whatever, right? Craps, you're always gonna get to a point where they know that you're gonna get into a hot streak, right? That's the way they play it, right? Everyone in the table has to have a turn for a hot streak, right? And what they want to do is that they want to keep you on that table when you're on your hot streak, because they know they're going to pull the rug from under you when that streak is over. All right, they'll pull it right out of you, and then you still have that heat feeling inside you. Now you made 100, and you made 500, but then you lost 500. Now you think you can make the 500 back, and you keep putting more money on the table. Before you know it, you empty out the ATM with your credit card, you go into debt. And that's what this is right now. So you have to understand, once you make your profits for the day, whether in any market, whether you're trading US 30 or Bitcoin, make sure you have a goal, right? I always tell my students this: have a pip goal, have a dollar goal, right? If you make, 100 pips a day, pull out of the markets, go sit down, right? I'll give you guys my example. When I started trading Forex, I had a goal of 20 pips a day, right? It was 20 pips a day, 100 a week, 400 pips a month, right? Once I started hitting like 5-figure trading accounts, then I went into 50 a week, 50 a day, 250 a week, 1,000 a month, and then so on and so forth, right? And that way you keep compounding keep compounding your goals, keep compounding your account. And also, one of the things that I recommend you guys, and this you have to do, and I know this is hard because a lot of you guys are afraid to lose like your account and whatever, but think about it like this, right? Whenever you deposit money into your broker, you have to understand that that money, it has a purpose, right? And you have to make sure that purpose is fulfilled. Don't make your deposit a donation. Make your deposit a deposit that's going to invest. Make it an investment, not a donation, right? So when you put that money in the market, you have to be aggressive with your investment, right? You have to take care of your investment and make sure that your investment is going to make you money, right? If you guys put $100 in your account, right, and you trade 0.01, that's cool. You're going to grow your money. You're going to grow your money. But if you grow your account to $1,000, why are you still trading 0.01? Right? That means that your mindset is not growing, but your account is, and you're staying behind, right? And you don't exercise that compounding of your account, which means that when you finally decide to go to 1.0 or 0.50, you are so afraid of it, and you question yourself so many times that you might mess up your analysis. You might see things completely off, and then when you finally lose that money and then you go and backwards analyze, you'll say, "Wow, how did I miss that?" It's because fear gets in the way. It blocks your vision, right? It completely blocks your vision, right? They say two things block your vision: love and fear, right? So you have to see yourself from the outside in and say, as my account starts to grow, so will my risk, right? So will my my lot sizes, my account will grow, my mental state will grow, right? My fear will decrease, and I will continue to grow my account at a compounded rate, right? That way I don't stay behind in any asset, right? If you guys want to grow your account to 7 figures, 6 figures, 8 figures, you can't do it just by growing that number that says balance, it says equity. No. You have to grow the equity in here, right? And you got to be strong for those losses, because you're gonna take L's. Every educator that just spoke today will tell you we took L's, right? We took large L's, we took small L's, right? All kinds of L's happen. But just because you take a loss doesn't mean you got to go bench yourself and sit down and go cry about it and then completely forget that you even trade Forex. You go back into that employee mentality, right? I'll give you a fun fact. When I first started trading, my first 6 months, I blew 14 accounts, $34,000 out of my own pocket. All right. And that doesn't include profits. With my profits, it was about like 50 grand or something. 14 accounts blown. Right? I see people blow $100 and they completely forget about Forex and they go back to whatever they're doing, right? But I had a good friend that told me that you have to think about it as market tuition, right? If you lose money, whatever, it's market tuition, right? You paying that way later, you don't end up losing money like that, right? You don't start donating money to the broker, right? You start donating money to your future, right? You put accounts in your kids' names, right? You buy them Bitcoin, you buy them trust funds, you buy them assets. That's what you got to think about in the future. But in order for you to get there, you have to get your mind out of that gutter, to get your mind out of that fear mentality of saying, like, I'll give you an example, right? Bitcoin right now. Yeah, Bitcoin is at 9,000. So what? Buy it. Doesn't matter. If it comes back down, buy some more. Because this currency, once this house happened, we could see Bitcoin hit 6 figures by the end of 2020, maybe even 2021. Right? But if you put $1,000 into Bitcoin today, right? Why are you so worried that it goes back down to 4? You should only be worried if you withdraw that money. Don't withdraw it. Let it sit there. It's marinating, right? Right. Food has to be raw before it's cooked and you eat it. Let it sit there. It's going to take some time. So don't be afraid to put your money into your investment, into yourself, right? Because, back when we were young, we used to run to the shop and buy the sneakers, no problem, right? We used to save money for 6 months to buy one game console and not think about it, right? But now, when we see this as a reciprocated income, as a reciprocated investment, where you put money in, it comes back out. Now we got to say, whoa, let me be afraid for 5 minutes and talk myself out of it. So I don't want to see that. I am a bullshitless trader. I want you guys to know the 100% of what it is. You're gonna lose money. You're gonna take a beating, but don't cry about it. You gotta to make sure that if you gotta cry for 5 minutes, but get back in the game, because right now, the way this market is going, the amount of money that you can make in this market right now during this crash is gonna be absolutely ridiculous. All right, there was a millionaire a trader that traded $21 million, and he turned it into $2.7 billion in a short trade. Right? What did he do? He shorted the US 30 market. That's all he did. Right? He put like thousands of lots in it and made $2.7 billion. Right? The guy is a Wall Street millionaire, and he's a Wall Street billionaire by simply knowing what this market is. Now, let me tell you something. Do you think he was scared about putting his $21 million in the market? No, because he knows how this works. He's already been through that mentality. All right? It's going to happen. It's going to happen. So definitely prepare, guys. Buy Bitcoin, grow your accounts, grow the capital, practice everything that you have learned today in terms of basic structures, bearish structures to the downside, bearish structures to the upside, order blocks, Fibonacci entries, excuse me, your confirmation entries, 3 or more. The more you get, the easier that trade is to set up. Your entries on order blocks. And if you guys have any questions right now, type them in the chat box. I'm going to take some time and go ahead and answer your questions. This was a great webinar for tonight. We had a lot of, let's see, yeah, $200 I'm about to have my bachelor's almost 2 years deep. Yep, that's great. It's great. I see a lot of people blowing accounts here. That's great. Yeah, we blowing accounts. This is the one thing we have in common. We all blow accounts. You know, that's, you know, as one of the things traders have in common more than profits, you know, blown accounts. Associates in trading. We're all going for masters here and PhDs. PhDs. Guys, if you guys don't have any more questions, I appreciate you guys being on. I'm gonna go ahead and put up here. Actually, my brother Mike has a YouTube channel. He puts some value out there. Definitely check out his channel. Put that right here for you guys. He has a channel right here. That's Mike's channel. I'm gonna put my channel here as well. I put, you know, YouTube videos on what I do. I also put some motivational stuff, which pretty much helps me every day. Do you know if Binance offers interest? No, Binance does not offer interest. What broker you use to buy Bitcoin? So I use Voyager. As a matter of fact, crap, I don't have the. Yeah, I don't use Binance, but the broker I use to buy Bitcoin is called Voyager. It's called VOYAGER, Voyager. It does not work in New York City. So if you live in New York State, pretty much you cannot use it. I mean, correction, you could use it. You just cannot put your address. You get it? So I'm guessing if you have like a cousin that lives in Florida or he lives in Connecticut, borrow their address. It's not gonna send you any mail. It's just, you know, confirmation. Do you scalp US 30? Yes, I do. I scalp US 30 sometimes. And I gotta give it up to one of my students. Her name is Luna. She is actually the scalping beast here. Oh, there you go. You put the link for the, yeah, that right there. So she put the link for the Voyager. So if you guys use this link for cryptocurrency to buy it, it will give you a $25 extra. You got to buy a minimum $100. And then you got to have 0.01 at least to get interest on your Bitcoin, which is like about $900 right now. All right. Let's see. Yes, yes, I do scalp US 30. Now, US 30, heavy times that I love to scalp US 30 is when the market opens, right? So the market opens for US 30 when it starts to move heavy is about 8:30 a.m. to about 10 o'clock in the morning, right? So if you look at your technical analysis when it comes to Forex Factory, you look at the news of what's coming. The big news when it comes to US, it gets released at about 7:30, 8:45 a.m., 9 a.m., right? So today we had the unemployment claims came out at 7:30 a.m. Tomorrow we have, what do we have tomorrow? We have the ISM manufacturing coming up at 9:30 a.m. Now this here is going to impact US 30 tomorrow. It is Institute of Supply and Management. This here is usually below 50, and it will be heavily below 50 tomorrow, which will indicate contraction in the markets, making it shrink, less production, less stuff like that. So that's going to impact this market heavy tomorrow. But again, with all of this money being printed, it's gonna hold steady and be pretty hard to bring down and start shorting it, right? So we took a long short on US 30 when it was all the way at 29,000, took it all the way to about 18,000. And then ever since then, it's just been slowly climbing. And right now at this point, it's just a ranging game. But if you want to scalp this market, I'm gonna show you how I do it. All right. So I'll wait till about 9 a.m. and then sometimes after 9:30 or right at 9:30. And you want to scalp by candles, right? So if this candle right here, it didn't mean that it dropped in 5 minutes. What you want to do is that you want to do a candle by candle, right? So we're going to go ahead and scalp this candle. This candle right here was a 2,000 pip candle, right? Now, what do we do? The candle is going to draw its direction, right? And mostly it was just bearish, but it doesn't mean that it didn't push back up. This candle had a lot of movement, a lot of jitters in between. What you want to do is that you want to identify the trend you're going in, which is a downtrend, and you want to make sure that you're trading with it, scalping, right? So you want to enter at the highest point for a sell, enter at the lowest point for a buy. Try to avoid the middle zones and only trade when candles break out. So if this candle broke out, right, if the clock turned right over, it said 5 minutes, and then it goes boom, 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 and there's still about 3 minutes left. Once this candle hits down here, I'm going to buy it. And I'm going to buy it really quick, right? And I'm going to I don't count pips. I don't put stop losses because it's a very quick entry, right? And I'm going to trade it maybe about a quarter of the way, maybe go from here to here, catch 500 pips, and then I'm gone, right? Now I close my trade. I got my 500 pips. And then what happens? It maybe would have pulled up even more. Now, if it pulls up past that zone, guess what? I'm going to go ahead and sell it one more time because there's still time left on the clock and have it come down, come down, come down. Maybe trade it to about right here, catch another 500 or 300 or whatever, and then pull out. Then have the candle come all the way back down, back down, back down. I'm seeing it come up to this zone, but now I'm seeing that I only have about a minute left, right? Guess what I'm going to do? I'm out. I'm not going to trade anymore. I'm going to wait to see more candles, and I'm going to wait to see maybe this one or this one or this one. Candles with movements, bodies, right? I want them to be, look at this one. This was a 900 pip candle, right? So I want to see them to have some movements. I don't want to see this. I don't want to see this. I don't want to see this. I'll let it all ride out. All right. So that's how I started trading my US 30 scalping. It makes it quick. It doesn't leave me in the market for too long. And you can make a lot of profit by simply doing a scalp. But again, to do that, you got to have capital, patience, and you got to have the ability to not let those trades turn into intraday trades, right? So if you're scalping and you go negative 200 and you know it's not going to go your way, you already know it's done, that you entered the wrong time, don't hold it hoping it turns around. Close it, right? Lose the finger, save the hand. That's the way I always teach, right? Don't risk your finger to lose your whole arm. It doesn't make any sense, right? Lose the finger, save the hand, and that way you can enter another trade with more profits. Maybe that wasn't your trade. Maybe there's more waiting for the future. More questions. You can transfer Bitcoin from one address. Yes. So I moved all my Bitcoin from Coinbase to Voyager. I have some on my Nano Ledger as well, which I keep offline, which is the best thing I can do. But I keep some online to get some interest on it. All right. But Voyager is fairly new. They do great jobs. They have a great customer support. So I have no problem with them whatsoever. Let's see what else. Follow market structure. Yeah, Max. Let's see. Yeah. Also, Joshua Rosario, CEO of LivingLifeEnterprises.info. Follow him. That's his website. He does trading education and credit repair service. So if you guys have like bad credit and stuff like that, hit him up. He'll help you guys out and definitely work with you guys. All right, for sure. All right, guys. So I appreciate you guys all being on here. Practice what you learn. Any questions, you guys take time to message us. And we'll be more than happy to help you guys out. All right, guys. Jonathon General, also FXM Genrev, right? Him on Telegram. He's got his little group, his little students on there, man. I'm proud of you, proud of your growth. Keep it up, brother. All right. All right, guys. Nice having you on. Be safe. Enjoy your weekends. Enjoy the rest of your week. Stay home if you have to. I mean, stay home and go out if you have to. Don't go out if you don't have to. Be safe and keep trading, man. This is the easiest way to make money from home while all this is going on, right? And bless somebody with this knowledge, because not everyone has the luxury or even are exposed to this, you know? So I don't sit here and blame people as to why they don't trade. I just sit here and educate people. That's why they should be trading. Maybe they don't know about it, you know? Maybe they're too busy or too focused on something else that just life throws in the way. All right, guys. All right, so be safe. Have a great night, and I will see you guys eventually soon.